people over here. Like we got CNBC up here. I need them to feel us. I need them to feel us. Where my trappers at? Where the owners at? Where the payments at? One more time, where my goddamn trappers at? Alright, on the count of three, we're gonna say we trapping. 1, 2, 3. Yeah, that's that shit I like right there. Trap house jumping. We in here.
That's what you make, right? You must be able to calculate risk. I am not a financial advisor or fiduciary. I am not a financial advisor or fiduciary. Everything I say is for entertainment and education purposes only. I know a financial advisor by the name of Rashad Bilal. He can take you to glory. I can take you to the trap house. He did. So that's kind of what I'm looking for. So when I look at defense, I like companies like Raytheon, right? Technology is a good company, right? I like companies, again, we like the Apples, but I like Bill McDermott, ServiceNow, right? I like that type of business. Like I like Viva Technology, right? I just talked to my travelers about a few things. So I'm looking for companies that have those moats that I love, right? Those moats that are, no matter what's going on in the economy, they stand strong, right? So a company with a strong competitive edge is something that I truly love, and a company that has strong cash flow, right? Those capital exponentials are looking real good. So that's kind of what I'm looking at. Even with Apple's capital exponential, that's money, right? Their cash reserve went from 196 billion to 79 billion. You can't come to another company that got 179 billion sitting on the side.
Apple is one of the most miraculous stories in the history of the stock market for so many reasons. But one of the big things with Apple that we've been saying over the past couple of years, you see analysts come out and downgrade the stock. They say, we were at a buy rating and now we're cutting it to neutral. Which I don't even know. I know how to buy and I know how to sell. I don't know how to fuck to neutral. But whatever, you see analysts. But then, so alright, so should I sell the stock? When you sell Apple, 1 of 3 people is buying.
Ooh, talk about that.
Okay, the first person that's buying is Apple itself. Apple is doing hundreds of billions of dollars worth of share buybacks. When they buy your stock from you, they retire, they kill it, the share disappears, which means the earnings are being spread out over less shares. Therefore, those who hold the stock have a higher share of the company's earnings and dividends. Okay, so you can sell it back to Apple if you want. The second person that might be buying it is an index fund. Apple is in the triple Qs, the NASDAQ. It's in the S&P 500. It's in the Dow 30. It's in value indexes. It's in growth indexes. It's in indexes that prioritize buybacks and dividends. It's in every major index ETF. So, the second person you might be selling Apple to is an index provider. BlackRock! Big dog. The third person you might be selling it to is Warren Buffett.
And the fourth person you're selling it to is Wall Street Track.
Berkshire Hathaway is the largest shareholder in Apple, and actually, in the first and second quarter of this year, they were net buyers. So let me ask you a question. And this doesn't mean Apple can only go up, but honestly, do you want to be the person that sells something to BlackRock, Warren Buffett, or Apple itself? You ask yourself, who's on the right end of that transaction historically? So I think Apple is fascinating for a lot of reasons. As a long-term shareholder, not selling it has been a way easier decision. So we do that. There are professionals doing that all day, every day. Why would you compete with people that have the ability to do that? For most people in this audience, trading is not your 9 to 5, and you don't want it to be your 9 to 5. Your real wealth creation is going to happen in your career. So adopt an investment strategy that does not require you to sit in front of a screen all day and try to outsmart the market. The good news is, long-term investing is the worst strategy, except for all of the others. We know it works. You've got to go through these periods of time where you're out of favor, and if you can do that, you can stick that out. last thing on this. Another Buffett quote. Investing is not a game where the guy with 150 IQ beats the guy with 130 IQ. The number one tool in the toolbox is temperament. So if you can sit through those periods of underperformance or market drama or whatever, do not take the knockout punch, do not chase the hot dog, you will be absolutely fine.
There we go. Round of applause, man. Round of applause.
Hey, we got a whole thing dedicated to dividends and Travis Anonymous called Drip Friday, man. You know what I'm saying? We love the drip. So, again, we love companies. So for me, I love companies that pay dividends. But for me, there's a metric that I look for when I'm dividend investing. So outside of investing in real estate investment trust, I want that dividend payout ratio to be like 65 to 70%. Right? For me, that's a good balance because I don't want them using all of their money to pay out dividends. I want them to use that money still for growth. Right? So I love dividend companies, but I also want you to be able to distribute that. I like company buys, I like share buybacks from the right companies, right? Josh, I heard you say something, Josh, on TV. You said, I got PayPal wrong. Right? But I still believed in it. I didn't switch on it, but I understood why he said it because they switched the reason, the story behind what they were doing. They said, yo, we're going to focus on customers, and then they said, nope, we're going to focus on our clients that's already here, right? And that sent the stock a certain way, but they just did a $15 billion buyback. So I was impressed with that, right? They don't pay the dividends. So for me, I love dividends, depending on it. So I own Costco, great dividend, right? So I like yields that can beat interest rates. Right, inflation, except for right now, it's high.
I like using drip as a synonym for dividend. I like that.
Yeah, we use that, man. The drip Friday, man.
So I want to say two things about dividend stocks that I think are really important for individual investors. The first is they're a great way for corporations to return capital, but they're kind of flawed because they represent double taxation. And I don't really understand why it is this way, but it is this way. Think about it. Company does $10 billion in revenue, 20% profit margin, so they net $2 billion in earnings. And of that $2 billion, they're going to take half and pay it out as a dividend to you, the shareholder. They get taxed on that profit. So the $2 billion profit, the government taxes them on that. And then when they distribute the dividend, you get taxed. Now, it's at a low rate, 20-something%. Not great, but not terrible. But that's double taxation. The company gets taxed for making the money, and then the shareholder gets taxed for receiving their share of that money. Stock buybacks, in recent years, have become insanely popular, especially since the Tax Cuts and Jobs Act of 2017, because corporations can take the same money that they would have ordinarily paid out to you in the form of quarterly dividend, and they can simply buy in those shares and retire them. So what you really want to look for is not just a high dividend, because you're getting taxed on that at the dividend taxation rate, but you want companies that are also doing a buyback.